All right, Pack, welcome back to another video here on the Dividend Doggo Show on YouTube, and I'm going to be bringing you in for the weekly portfolio review. We're going to go over exactly what came into the portfolio this week, as well as what was going on in the roller coaster of a market that we are living through right now and the stocks that I currently hold. So we are looking at M1 Finance. This is the taxable brokerage portfolio. This portfolio is meant to bridge the gap between early retirement and getting to access that 401k money that we have built up, my wife and I, with our employers. So let's take a look and see how we're doing overall here. Market gain is down a little bit. We're at 119,000 with market gain, and then earned dividends is gone up. That is just shy of 50,000 at $49,799.77. So within the next 2 weeks or so, we're going to be crossing over that $50,000 of earned dividend income threshold. Now, this portfolio has existed in its current form since August 6th? Yeah, August 6th, 2019. So just a couple years ago, this portfolio was created. We funneled a bunch of money into it using cash out refinances and a savings rate of about 35 to 40% for 2019, 2020, and 2021. So we save a large portion of our money and invest the majority of that into real estate assets and into stocks. So what you're getting is the glimpse of the stock portion of the overall portfolio that we have. This is one portfolio. We do have several others. So in the future, I will likely talk about those, including possibly 401k funds and stuff like that. But for right now, we're going to dive in and see how we did for the week. So the stock market had a pretty tough week this week. Not nearly as bad as the week before, but overall, we earned about 6 cents in dividends, and then we had negative $5,831.72. So overall, a few of the pies were in the red. A couple of them were just barely smidge in the green. So let's take a look at this and dive in overall. So in finance, you can see we have Citigroup, JP Morgan, Ally, Bank of America, Bank of OZK, and T. Rowe Price. T. Rowe Price is one of the newest ones that I added, as well as Citigroup. So these are positions that I'm planning on holding for a bit, just to kind of weather the storm and see how things go. Overall, finance was down just a little bit, couple percent for some of these stocks. And Bank of OZK was actually in the green, which is pretty wild when you consider all the other ones were in the red. So all in all, not too bad. Not really that worried about the finance pie at all. Consumer pie here, Altra was down a little bit more. Their dividend's going to be rolling in. This is one of my largest dividend payments. This is getting down close to the cost basis that I have on the stock. I am likely going to be looking at rolling this dividend and dripping it straight into the stock and buying some more shares. Overall, there's a lot of doom and gloom news, a lot of worry about Juul. Honestly, Juul doesn't make up enough of their income to really have me too worried about it. I love the fact that they've got some diversification with Budweiser, Anheuser-Busch. They own, I believe, like 10%. So that I'm not too worried about Altria at all. It earns a very heavy dividend, and I've absolutely loved rolling that into other stocks. So it might be coming around to that point. So this week we had Coca-Cola up, Home Depot down, Costco in the green, Lowe's down about 3%, Target down 5% again. Target's dropped so much that I believe it's right. Yeah, it's still above my cost basis, but this is definitely in buy territory for me. It's getting real close to the cost basis where I want to start adding a little bit more to it, because I do believe overall there's only a few stores that my wife truly loves to shop at. Target is one of them. So they also have the red card, which is fantastic. It competes with Amazon's credit cards. Absolutely love it. We're going to jump in next to the Come On Money Pie. That was down. SCHD did pay out its dividend, which is partially what you see here with the buying power right now of the portfolio being $1,800. SCHD's dividend did come in at the end of the week this week. So it's down about 1% overall. Not too worried about that. They just paid out the largest dividend they've ever paid, which is absolutely fantastic. Healthcare, we've got AbbVie up about 1%. We're at about 153. The cost basis is still screwed up here. I'm still waiting on my ticket with M1 Finance. It's been over a week now just to try to get something resolved with that. But Johnson & Johnson's down a little bit. Not too worried about that. Then we have utilities. This is VST and Duke. A lot of you know that I have been buying up shares of VST last year. I did sell off a bunch of shares. Ignore the cost basis in here. Again, a bunch of the stocks in my portfolio are still screwed up on the brokerage end. It's Apex. It runs the back end for M1 Finance, and I've still got the ticket in for that. So the cost basis here is way off. The share price was somewhere around $18 a share before I made the big sale. But overall, it did come back up about 2% this week, about 50 cents a share, which is pretty solid overall. So I'm curious to see if it'll continue to go back up. I kind of feel like it got a little out of wonk there with it hitting like $27.50 a share, which is why I went ahead and sold. That's like, almost $10 a share in profit off of that stock. So, trimming down the position down to where I originally had kind of wanted it to be, and taking all of my gains from the portfolio out, taking my original position out of the portfolio was absolutely the right call in my opinion. So overall, we have BST down about 4% this week. That tracks the tech stocks. This is a monthly paying long-term capital gain stock, which is absolutely wild. This is in my cost basis range, so I'm likely going to be doing a little bit of a buy, at least dripping the dividend for BST back into itself. So that's overall how the portfolio looks for the end of this week, down about $6,000. Not too bad. When I zoom out and I look at the overall, I am just so excited to be crossing that $50,000 range with earned dividends. And in red weeks like we've had the past couple weeks, one of the things that I absolutely love to do is I love to go and I love to look at, how the stocks have been rolling in and what has been paying me into the portfolio here. So I do want to say a thank you for everyone who did use the referral bonuses. I've gotten a couple of those in this month for June. That was absolutely fantastic. I really do appreciate every single one of those, and I hope that y'all all have a really positive long-term experience on the M1 platform. I will be removing the links for the referrals as of this video. The primary reason for that is I am likely transferring off of the platform. So I wanted to briefly mention that and why. The main reason has been my customer service experience. The second reason is the lack of options. So while I am not a day trader, I do like to have options available to me and ways to earn extra income to throw at the portfolio. So I am looking at several different platforms to move to. However, I will definitely be taking y'all along with the journey with this portfolio. Nothing's going to really change on that front. But as you can see here, we have a bunch of dividends coming in. The rewards redemption, this is the credit cards rewards that you see next to the monthly dividend stocks. So all of those companies, I use a lot of them throughout the month. This month I had to book some flights out toward the end of the year, so I booked the flights using the credit card, saving 5%, going directly through Delta. So that is partially where that big bump came in at $186. So there are reasons to that I will likely stick around with a small portfolio in M1 Finance. just for these extra rewards. Those are absolutely fantastic. But thank you very much for everyone who has used the referral links. It definitely is appreciated. And I hope that every single one of you is inspired by seeing these dividend payments roll in and seeing the portfolio every week, and kind of hope that it gives you a little bit of focus and direction with your portfolio. Always keep that long-term, long-haul mindset. Even if the stock gains overall are going down, the earned dividend income is constantly being pushed up by these income dividends rolling in and producing more buying power for the portfolio. So I do want to say thank you very much for watching, and I hope that y'all all have a fantastic 4th of July weekend. Stay safe. Stay and enjoy. If you've got good weather, hopefully you have good weather. I know that it's really hot in a lot of places in the country right now, but I'm hoping that you can enjoy the holiday and have a safe one. This is Dividend Doggo signing out.